Good afternoon, everybody. Happy Wednesday, June the 4th. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. It should basically be the same. All right. We closed flat. SPYs are up 8 cents after the close. I didn't realize that we closed flat. Well, it's good for the buying. It's good for the buying. Get the vol control people to step in, give us a little bit more of a bid. SPYs are flat. We definitely need more buyers in this market. There's not enough. Qs are up 0.3% with a little bit of an after-hours uptick. I think that's coming from MDB. Yeah, MDB crushed up 17%, 5 below. Oh, they bounced back too, because of course they did. IWM is down 0.25%. TLT, there it is. TLT was a monster today, up 1.75%. Gold was also notably strong today. I want to circle back to both of those in a second. Oh, shoot. All right, well, I'm just going to continue from where I was. All I was saying was where things closed, so this is the usual beginning of the meeting. USO here closed down 0.9%, and IBIT closed down 1.5%. You know, there's some really notable stuff here with TLT, Gold, and IBIT, even though the index is closed exactly flat. And I was just joking before I had turned the microphone on for the VTF that a flat close for the SPYs, that's bullish. We can get a little more of that vol control bid to come in, and we know that this market needs more buyers. There just has not been enough buyers out there. Let's look at the market. So, I mean, I don't know, guys. I don't know. I have never... I've seen markets, and I mentioned this, I think, in an afternoon meeting yesterday or the day before that. I've seen markets where bad news really gets ignored and ignored and ignored and ignored, and then all of a sudden it matters, and all of a sudden the market moves on it. But the degree of the resilience on bad news at this point, especially after what happened today, is mind-blowing to me. This market can't go down. It doesn't matter who says what, or what economic number comes out, or what earnings report comes out, or what trade war happens. None of it matters. None of it matters at all. We don't downtick. We're downticking even less. I think the last time I was whining about this, I was talking about last Friday when we had the China-US stuff kind of going south, and that gave us a 15-minute sell-off, basically, and then we snapped back. And then on Monday, we sold into it, but we had a very short sell-off on the ISM manufacturing number, which was pretty bad. Yesterday, we actually had a decent JOLTS number, so of course the market had a massive upside day. And then today, we had 2 crappy numbers hit. And again, both of these numbers aren't necessarily the most important in the world. Honestly, especially the ADP number that came out pre-market. Pull up the pre-market chart here real quick. Market tends to not give a big move on ADP, and we have seen in the past ADP come out before the non-farm payrolls number, and they don't look anything like each other. A bad ADP and then a good non-farm and the opposite way, so there's not really too much to read on that, but it was still a pretty abysmal number. I don't remember what it was exactly off the top of my head. It was something like we were expecting 110,000 jobs and we got 37,000 or something like that. It was like a very big miss. So, you know, we had a downtick this morning. Here it is, pre-market. We downticked on that ADP number for 10 minutes from 597.50 down to almost 595.50. And then by the time the market opened, basically within 5 minutes of the market opening, we negated that. Fully negated it. Market said, we don't care about that one. And then ISM services hit today. And ISM services was not good. Also not necessarily the most important market moving number in the world. But similar to ISM manufacturing, I read a degree of stagflation in there, and I'm not a stagflation alarmist. I never have been. I've been hearing chatter about stagflation the entirety of my career, going back to 2008. It's never really been able to manifest itself, but you can't deny the numbers. We missed on ISM services, and was it a contraction number? I don't remember exactly where it came in. It came in under 50, right? It was expected to be above 50, but came in below. I know it was a miss. If someone's got those numbers in front of them and can repost them so I can read it, that'd be cool. If not, we'll just go off my memory. It was definitely a miss. It might have even been a contraction number. Yet the prices paid number in there was higher than expected. So lower growth than expected, higher prices than expected. Hit for services at 10 a.m. today. Yeah, there it is. Thank you, Eli. It came in at 49.9 versus expectations of 52. And I think everyone knows this, but when you're looking at these ISM numbers, above 50 means expansion, below 50 means contraction. It came in at 49.9. Technically, that's contraction, but not a lot. But it's a significant miss compared to expectation. Yet prices went up. So again, we have like a stagflation number that repeated exactly what we saw with ISM manufacturing on Monday. And what did the market do? The market went down for about 7 minutes. It went from 597.50, the same starting point as the ADP number, down to 595.50, also about the same low as the ADP number, just to give a 100% reversal of it within 30 minutes. I mean, this is just crazy. There is nothing that can get this market to go down. And I don't understand it at this point, to be totally honest. And maybe it doesn't matter that I don't understand it because the technicals are the most important thing. But I drive myself a little bit crazy sometimes when I don't fully understand what's going on behind the scenes. It was very obvious to me that there were some big buyers coming into this market in late April and the beginning of May from the systematics, and that could lead to hedge fund buying. Last couple of weeks we saw big hedge fund buying. Maybe there's a continuation of that today and yesterday, but I'm blown away that we cannot move down for more than 7 minutes on bad economic numbers. I could see what happened at the end of last week, where we were getting worsening information on the trade war front. I could see the market just kind of getting tired of that narrative and not going down in the way it had previously, because the whole thing about the tariffs and the trade wars, the reason why the market sells off on tariffs and trade wars is because tariffs create an expectation of lower growth and higher inflation. But you've seen, if you've traded for a while, market themes get tired at a certain point, and just the first one that comes to mind as like a recent example was Ukraine Russia back in 2022. When Russia first invaded Ukraine, there were big market movements on that leading into the invasion, at the invasion, shortly after the invasion, and then if you fast forward to last year, if you fast forward to this year, the market cares almost nothing about Ukraine and Russia. I'm sure that if we actually did get a lasting treaty, that there would be an uptick on it. But barring an actual signed on the dot treaty, I don't think that we're going to get any movements at all out of Ukraine, Russia, barring a lasting treaty or barring like a nuclear bomb going off. And we certainly hope that second one doesn't happen. So I could see, the same thing with the tariffs, like the tariffs just getting a little bit tired, where the idea here is tariffs are bad, trade wars are bad, they lower economic growth. But after a couple months of nonstop headlines on it and dips being consistently bought, the taco trade, whatever you want to call it, maybe the market gets tired of that narrative and it says, all right, well, if tariffs are supposed to lead to higher inflation and slower growth, show me it in the numbers. So that slowing down makes sense to me, but then we're getting these bad economic numbers that are completely shrugged off. And the ISM numbers and the ADP number, to repeat myself, are not the most important in the world, but I would think that they would give us a sustained downtick, meaning like maybe it's not the biggest down move in the world, but that down move isn't 100% negated. Maybe the ISM services number, not the most important in the world, maybe it brings us from 597 to 595, but then we we stay at that 595 area and trade around 595 as the market digests that new news as being broadly worse for the economy for obvious reasons. It's literally a worsening of economic numbers. But it's not what's happening. We have had this is a really big important week for economic data. We have had 4 numbers come out so far. 3 of the 4 have been bad. 1 was good. The 3 that came out bad led to 0 down move. The 1 that came out good led to an index level breakout yesterday. Huge upside continuation. This market is crazy with the amount of buying that's underneath it. And I still feel like that some of the buying and some of the names that we're seeing, some of these names that are just like really, really running that don't necessarily have a lot of substance behind them, some short squeezes that may be happening, are just, late cycle type of moves. And CoreWeave could almost even be one of those at this point. The thing about a late cycle move, though, is that late cycle move doesn't just mean that tomorrow it's over. That can last. And that really all goes back to the end of 2020, early 2021, where we had the biggest bubble in like long duration stocks that I've ever seen in the entirety of my trading career, and it lasted for months and months. And we knew it was a bubble at the time. That's when ARK was super hot, and ARK was buying up all these crappy companies that don't make any money at all at absurd valuations. And then that led to ARK becoming one of the biggest destroyers of assets for people that invested in it in the history of actively managed funds. Up there, one of the worst. And then ever since that happened, whenever you start to see a run in some of the crappier stocks, it's every time for us since then been a signal that we are close to a near-term top. But it's not necessarily like a 1-day, 2-day phenomenon. There's no way to put your finger on like, ooh, they're starting to really run the crap. That means that tomorrow the market's going to top. It could be tomorrow. It could be next week. It could last for a few weeks. You could even get a late 2020, early 2021 bubble situation that lasted for months. So it's notable as a signal that we're late cycle in the up move, but does not necessarily mean that we have to sell off tomorrow. But the market is just incredibly strong, and I've said this a few times. There's 1,000,001 reasons to be bearish right now, but there is one very, very, very important, probably the most important reason to not be bearish, and honestly potentially even to be bullish, and that is that the market technicals have broken out, and they're, for the moment at least, holding the breakout level. So you can be bearish all you want, but while we are above SPY 593 to 595, you really have no business heavily pressing shorts. It's just not there. And if anything, the long trades are working. Long trades are working. The breakouts yesterday at the index level worked. Continuation in some of the strongest stocks that are out there, like a Carvana, continues to work. They continue to press higher. Robinhood continuing to press higher. You're better off. You could have bought that breakout in Robinhood just a few trading sessions ago and be $7 in the money right now as we're having this conversation, or you could be fretting about the fact that we should go down for choose your reason and be pulling your hair out because you're just losing money on the short side. But what I'm saying to do is respect those technicals, but just know where we broke out from. I still don't think it's impossible for I'm not net long. I'm net short. I still don't think it is impossible for this market to give a failed breakout. But don't predict the failed breakout. That is a losing scenario. If you wanna look at every bullish technical pattern that you can find and just assume that as they're working they're gonna fail, you're gonna lose a lot of money. So don't assume that that failure will happen, but know that it may happen and be prepared to act if it does, and then that maybe becomes your trigger to short if you have a bearish thought process on this market. But we're continuing to hold in, and it's literally mind-blowing to me at this point about how day after day after day for the last week or so, we cannot downtick on any bad news, but we can go up on seemingly the slightest pieces of good news. That's just the market environment we're in. And to repeat what I think I said in yesterday's afternoon meeting, I've seen this before. This might actually be becoming one of the most extreme situations of it. But I have seen this situation before where good news is coming out and the market ignores it and continues to go down, or bad news comes out and the market ignores it and continues to go up. That's the situation that we're in right now. And then sometimes it's this crazy situation where just all of a sudden the market decides to sell off, and the financial media will be repeating all of the negative stuff that we have known about and talked about for 2 weeks. And why did it happen to trigger all of a sudden at that time? Your guess is as good as mine, though a lot of times it tends to coincide with like a market dynamic related event, like an options expiration or something like that, which we're still a couple weeks out from OPEX. So I don't know, but the market is very strong, and the technicals are saying, don't force it. Don't force it, feel it. So, I mean, that's really all that I've got. It was interesting to see some weakness in a couple names today. It was interesting to see Palantir's weakness. It's the same thing. It's like, oh, Palantir was really weak in the beginning of the day, and then it V-bottoms and gives like a decent downside tail and still closed pretty much at the 130 level. I remember looking at this weakness off the open and being like, oh, wow, if this thing loses 130, that could be a big deal. And it did, and then it bottomed, and then it came right back up and still closed at 130. And the daily chart technicals here still look just fine, and now it's a nice, actually healthy-looking downside tail on the stock that may be setting up for upside price action further. I have noted to you guys, though, that this name hasn't been trading right. I do think that seller has still been there. And while the daily chart looks beautiful, especially above 130, I feel like the seller has still been around, and we've seen a lot of those momentum moves fail recently. And I still kind of attribute last Friday's candle, the high volume close on highs for the breakout, as having to do with more MOCs than anything else. A close below 130 in Palantir is helpful for someone that wants to be bearish, because that actually is the beginning of a failed breakout, unlike the market where that hasn't happened yet. But really, this thing's got to close below 125, I think, to start looking not good. But yeah, there was some weakness there. Tesla was weak. Tesla's in a little bit of a universe of its own. The traders, the market participants involved in Tesla don't seem to like the commentary on Elon consistently doubling down on bashing the big beautiful bill. But 330 is the really important level that I had been talking about in this Tesla, like 330 to 333. We closed at it, so it's still not broken. We closed at 332, so we closed right in that zone. Stock is still not broken, but very notable relative weakness there. If somehow, some way, somewhere the market were to pull back and this thing loses 330, it'll start looking really bad technically. At certain points today, we saw some weakness in some of the semiconductors, but that didn't last. NVIDIA was a little bit weak off the open, got hammered down on the ISM number when it hit, but really that was a buying opportunity into that 140 again, extension into support, and then it closed really well. So a little bit of interesting weakness in the beginning of the day for a couple of these, but it didn't last. NVIDIA looks phenomenally bullish. Micron looks phenomenally bullish, albeit extended, and then AVGO is going to be a really interesting one. Phenomenally bullish, also getting really extended, and that's into its earnings report tomorrow. I'm very curious to see if AVGO becomes a CRWD situation where the numbers maybe be okay, but they sell the stock down just because how big they bought it up into the actual report. And then obviously the AVGO earnings tomorrow is going to have a really big impact on these other semiconductor names that have been incredibly, incredibly strong. I can't help but wonder if AVGO selling off on earnings, bringing down potentially the other semiconductors, which have been the leaders, could actually be the thing that cracks this market a little bit. But that's even assuming that the stock doesn't, for all I know, AVGO is going to report blowout, incredible, amazing numbers and be at 280. And if it doesn't, then it sells down. Well, the market will probably just buy something else so that the SPYs and Qs can continue to go up, because that has been the theme of this market. I think that's all I've really got. I'm happy to answer any questions, like always, that any of you guys may have. So let me scroll up here and see if I missed anything. Dennis, we ran into some resistance today in the Qs under 530. We're never able to get to the round number and roll into the close. Don't want to overread it, but I felt it was at least like an indecision day. Yeah, I agree with you. I think it actually was an indecision day, and you made a comment earlier in the day today that I thought was also very correct. That short trades were working today when you found them. They just weren't giving follow through. And like I've said, like Brant said when he was on the radio earlier today, this market has been punishing anybody that is trying to push for follow through the downside. Downside follow through does not occur. But there were some shorts that worked. It actually is a very tight candle. It's a tight doji on the Qs. It's a very tight candle in the SPYs with a not wonderful close. We did sell off a little bit into the close on the SPYs. So it's like, on the one hand, how can you not be impressed by how well we still held in on those bad economic numbers today? On the other hand, and maybe, by the way, the only reason why we didn't continue to SPY 602 was because those numbers even came out, right? So the inherent buying that has been nonstop just ran into some additional selling from those weak numbers that led to these tighter candles. But we did close on lows. It was a tighter day. You could call it an indecision candle. And I still don't think it's impossible for this breakout to be a failure. I just am blown away by how well this market is holding up in the face of any and all potential bad news. Mike H here giving me a chart. This is going on in the background. It's a chart of global M2 and Bitcoin. Yeah, so that's been a very consistent thing for sure. I've seen these charts before. There appears to be a correlation between the global money supply, global M2, and the price of Bitcoin. As money supply moves higher, Bitcoin moves higher. So that has been that's been going on in the background for sure. And that also actually positively impacts stocks, by the way, when that happens. So M2 increasing is actually also a positive for stocks. Liam saying he's surprised about Wells Fargo's action. Yeah, me too. That Wells Fargo news seemed pretty good. I'm very surprised that this thing closed red. I'm not surprised it pulled back a little bit off highs, but I'm surprised by the degree of the selling. So there's a stock that actually sold off on good news, let alone what could have happened maybe if bad news came out. We haven't seen a lot of that. Yeah, essentially unchanged. From David, regarding XLF, is the third 5-minute candle of the start of the day a signal to short since it failed to break the high of the day? Is the third 5-minute candle? No, I don't think that's a short signal. Let me read the rest of what you have to say. I was not sure if that was a signal to short since it failed to break the high of the day and did not keep going up even with the Wells Fargo news and starting off above support. Sure. So first thing I would note is sometimes there is a signal that tells you not to buy. A signal that tells you not to buy is not necessarily a signal to short. So that would be the one thing that I would say. The second thing I would say is that candle on the second 5-minute bar is not unhealthy. XLF got a little bit extended to the upside off of its 8 and 21 EMA, its equilibrium area on the 5-minute, and it gave a technical pullback to it. You see this happen all the time, and then you get a pivot low, almost like what happens in the fourth bar, and the next thing you know, you're getting new highs. And I always start with the big picture as well. While XLF is above 51, that's been a resistance level. It's technically a breaking out above 51. I don't want to be shorting stocks right above potential breakout levels. Can it fail? Sure, it can fail. Anything can fail, but I don't think that that's a good trade. So all I see in this chart is XLF higher. Good news with Wells Fargo, which is in the XLF stock, or in this case the ETF, gets a little bit extended after 2 buy bars, pulls back to equilibrium. For me personally, my preferred trade here, even though it doesn't work, would be to buy off the fourth candle. You get a downside tail, you get a doji into equilibrium, but it's still above the $51 resistance level. You can look to buy that for upside continuation to then see if opening highs break, which it doesn't work, it fails, and eventually the ETF loses 51, and Wells Fargo sells all the way back down. I don't think that you could have predicted that Wells Fargo would go red today on that news, and XLF now back below 51, by the way, looks like it's now confirming a little bit of a failed breakout with Wells Fargo selling off on positive news. Now, given that, I then prefer the idea of looking for a short in this name after it gets below and holds below 51. Potentially that could carry through to tomorrow. You could look for a short in this thing now that's below 51. We're seeing Wells Fargo sell off on that good news. You could potentially try to short this versus, like, if you're a little bit bigger picture, versus today's high for like a swing trade, or if you're a little bit smaller picture, while it holds below 51, you could look for a smaller signal to short. I appreciate the question. I hope that helps. Definitely did not feel like Monday and Tuesday for longs. It's essentially unchanged now since the news. Yeah, Wells Fargo, I think you're talking about. Hopping over to the YouTube from Sherry Invest. S&P 500's closed yesterday is 59.70. S&P 500's close today is 59.70, 40-cent change. Yeah, so pretty unchanged today for the S&P, despite negative news. But it did close on lows, a little bit of an indecision candle. Maybe we get some downside follow through. Maybe. I still think that the non-farm payrolls on Thursday is going to be very decisive, but we'll see. From Gabriel, I know you're bearish right now, but look at the Ethereum chart and the ARC chart. Both look poised to break out. I'm not that bearish because the market's broken out. I'm more bearish in thesis than I would want to be in practice because the market is broken out. There are many really good-looking charts right now, honestly. ARC here is another one of them. Ethereum doesn't look too bad either. I would personally rather own Bitcoin than Ethereum, but Ethereum doesn't look too bad either. So, yeah, I don't know. A lot of fantastic looking charts. The indexes also, overall, despite today's candle, still look fantastic. So, don't fight those technicals. Don't be afraid to take those long trades. Like I said earlier, don't be afraid to buy that Robinhood on that breakout. But also be mentally prepared in the back of your head that we could get a failure on this move, especially if bad news continues to come out and the market decides it wants to suddenly care about it. Can you also give your thoughts on CoreWeave parabolic short? Today didn't feel like the last day yet. Was looking for a close above 170 and a gap up tomorrow. We might still get the gap up, but the price didn't look like exhaustion yet. Sure. Yeah, I mean, CoreWeave is just another one that's just completely insane. I was talking about it a little bit with Sammy and JR. It looks like it's trading up after hours because, of course, it is. Yeah, I mean, you could argue that today is a day 4, but I really feel like it's more like a day 2. It was just yesterday that it broke out to new all-time highs. Today it gave continuation of that. It is very extended here. So tomorrow I like it even more for the short than I did today. What you got to remember is with these recent IPOs and this CoreWeave especially, is that they have very low tradable floats. You're not at the lockup period yet. That's 180 days, I think. We're not even close to that. We're not even halfway to lockup expiration on it. In addition to that, the tradable float on this is especially going to be smaller because they reduced the float of the IPO because they couldn't get the thing off the ground. Isn't it incredible they couldn't get this thing off the ground at $40 or whatever, and now look at it at 165. And then on top of that, in order to get it off the ground, even at the reduced float, possibly a reduced IPO price, they needed NVIDIA to step in and buy a whole ton of it. Does anyone remember on the CoreWeave IPO day? I remember Brant commenting about it. The CoreWeave CEO came on and said, I don't think we would have been able to do the IPO if NVIDIA didn't come in and buy more stock. And Brant was like, that's a stupid thing for a CEO to say. But NVIDIA did come in and support the IPO by buying additional stock, and they're probably not selling. So that means that there is even less, stockless tradable out there. So you're just creating a huge squeeze here at this point. And then you couple that with some additional factors. I wonder, there was a lot of chatter today on how hard it was to get a borrow in this CoreWeave. It was very hard to get a borrow from a lot of different brokers. It was very hard to get a borrow at T3. T3 usually has very, very good borrows, and it was hard, and it wasn't always available. When it was available, it was really expensive. I don't know if that's bearish necessarily. I don't know if this thing is bearish when you can't get a borrow necessarily. It's like on the one hand, you don't have the additional sellers coming in that are on the short side that can push it lower potentially. But if they're not coming in to sell additionally to push it lower, they're also not going to be buying on the way down when it actually breaks. And also, it means most likely that much of the stock is already, much of the short availability is already out on the street. And if much of the short availability is already out on the street, they're all losing money on it. They're all down money on it. They're all losing money on it. And then that's creating probably more of a feedback cycle of forced short covering for a loss with no new shorts actually being able to come in than anything else. And then when you think about that expense, I noticed, and this is not that unusual, yesterday and today, it upticked into the close in the last real 5 minutes there or so. It upticked into the close. Keeping CoreWeave overnight has a very expensive borrow. So people are probably covering some of their short into the close going, not only am I smoked in this thing trying to be short it, but I'm going to be paying up the wazoo to keep it overnight. So then they're covering them into the close. They're covering it in after the close. We saw a squeeze higher after the close yesterday. Thing is up another $1.50 or so after the close right now. It could squeeze up higher as well. It's just these dynamics are very conducive to higher price action for the moment in this. So that's kind of where CoreWeave is at. I don't think that the stock belongs at this price by any means, but that doesn't matter because of the short float stuff we're talking about. I think at some point the stock is going to have a nasty, nasty downside crash day, but I can't tell you if that's today. I can't tell you if that's at 180, at 210. Fascinated by the fact that Bill K told us that $21,200 calls traded hands today. $200. That's for this week, weeklies. Crazy. And then you get gamma squeezes that potentially come from that. So I do think that this thing will crash down at some point. I just can't tell you the when, where, why, or how. So yeah, we'll see. We will obviously be monitoring this thing very close. I think it'll give a great short opportunity at some point. Can't tell you when. I had one more comment on this that I was going to say, and I don't remember what it was. Oh, it's just on the need to raise capital. Um, one of several reasons why people were bearish on this thing on the IPO. One was because Microsoft is their biggest customer, and Microsoft was already pulling back on working with them. But two was because the company was probably going to need to raise more money for their ongoing operations, and they weren't even raising as much as they wanted to on the IPO. I don't know if they can do a secondary this close to their IPO. Someone on the team here, I think it was Rob, let me know that it depends on the prospectus. Maybe they can, maybe they can't. If they can, I don't know why they're not doing it. It's stupid for them to not do a secondary here if they can. I don't know if they can. But supposedly they need to raise capital. They didn't raise as much as they wanted to on the IPO. Why not do a secondary right now at $120 after the close here today and raise some additional money? You'll crush the stock, but that happens every time that a secondary offering happens, basically. And it's smart management. I remember also talking about this back in the late 2020, early 2021 period. It's smart management. If you're smart enough to know that your stock shouldn't be trading at the price that it's trading at, do a secondary offering, raise capital. Yeah, you're going to immediately hurt the stock, but you're going to help your business. The flip side of that is, I don't know, maybe people are hoping that this price stays elevated up to the lockout period and they can, as an insider, sell at those elevated prices. And you care more about your personal wallet than you do kind of benefiting the company. So, yeah, we'll see. You can check the open interest tomorrow. That'll be interesting to see. Final comment here in the YouTube. Spotify and Dash started moving away from their base. Yeah, Spotify, real leader in this market, breaking out again, also looks phenomenal for continuation. DoorDash, I don't really look at so much. Yeah, same thing. This market is crazy, some of these names, the way they're breaking out and moving right now. Absolutely crazy. But same deal. Would you rather buy the 215 breakout in Dash today? Or would you rather be just sitting around all grumpy that your short idea isn't working? I would rather be buying it, yet I find myself sitting around being grumpy that my shorts aren't working. So hopefully you are just respecting the technicals and buying it. All right, looks like I got through all the questions and comments, so I'll wrap it up there. Have a hold on, I missed something here for me when I searched it up the other day. It's like early September the lockup has to be done for CoreWeave. Yeah, September is a ways away. From Dennis, if anyone wants to check out CoreWeave, Lance Brightstein has a live video on it last night, probably still available on YouTube. He said the same thing. This is a day one yesterday, and for this to turn into something you need 3 or more up days with gaps and a lot of volume, exactly what Derrick said. It's not the same as SMCI or MSTR. Yeah. I like Lance a lot. Good guy. From Shoa, CoreWeave Business Edge is they have NVIDIA hardware, which eventually all cloud providers will have NVIDIA GPU clusters. Thoughts? Microsoft could buy them out. Microsoft was going to buy them out. I don't think that they would be using less of their services. I also don't think it would happen so close to the IPO. And I also don't think it would happen at these prices. So I don't think that Microsoft is buying CoreWeave anytime soon at these prices after what it just did. They could have done it at $30. So yeah, I think that I don't think that CoreWeave is necessarily a bad business or not a real company or anything like that. I just don't think it belongs at these prices, and they need to raise capital. So we'll see what happens. All right, have a great night, everybody. I will see you all tomorrow.